podcast live stream roundtable, the Midsummer edition. Joining me is Ryan. You know him from YouTube at Retire with Ryan, Tom, the savings captain, and the dividend dog. So let's just go around and reintroduce ourselves. Start us off, Ryan.
I mean, there's not much more to it than what you already said, Dave. My name's Ryne. A big time dividend investor. I'm a diehard dividend guy, and I am coming to you live this morning from Sin City in Las Vegas.
Woo woo, Big C baby. Let's go.
That's
Yeah,
right.
go ahead there, dividend dog. Why don't you give yourself an introduction as well?
Awesome. Good morning, guys. I am, as Dave said, I'm the dividend dog, but my name is Ted Williams. Like baseball player, as everyone probably associates with it. Excuse me. Got a slight little cold right now, but I'm here in Atlanta, Georgia. Once again, like Ryan said, I'm a diehard dividend investor as well. I like to trickle into growth stocks, such as Uber, things of that, and yeah, just trying to be on the internet and Twitter, YouTube's where you can find me as well. Investing on a 9 to 5 YouTube, and we got a podcast as well, with my buddy Paul, and yeah, that's where we're at, hanging out with all you guys, basically buying income every single day. It feels like, and it's been a journey.
Awesome.
It's been an awesome journey.
Nice. And yeah, Tom, go ahead and give yourself a reintroduction. I see our first comment here is already saying Tom looking fresh. So
That's funny. Hey guys, I'm Tom, also known as the savings captain on Twitter. So I'm in the Charlotte area, and 30 something years of financial services experience under my belt. I know a lot, but I don't claim to know it all, and just love interacting with people and on the debate on investing, investment approaches. There's no one size fits all. And I just can't understand why people don't think that Realty Income is the best REIT in the world. But okay, we can all.
I think
Ryan,
we should
do you
get
want
into
to
that real
respond to
quick.
that?
I think we should get into that real quick. I don't disagree, but I'm curious to know. Realty Income's a bigger position of mine. I'm just curious to know what it is about that company that you love so much, Tom.
Probably that I've held it for 7 years. It took a very defensive posture in my position portfolio last year when the rest of the markets were down, because left to my own device, I would be in stocks like Nvidia. I would be, and that's great on the run up, but right on the way down, you need, it's almost like bowling with guardrails, and that has grown to my biggest stock position. It's outgrown some of my growth stocks in size. It's the only one I continually add to, and my stage of life might be different than some people in the audience. I'm going to be 55 soon, so a 5% monthly income with the chance for growth and stability, that's important to me. But 25 years ago, I passed up. I was around either in 92 or 94, and I had IPO shares at my rent at Realty Income and said, oh no, who would ever want to invest in 4%? I didn't see the sense of it, but I was 30 years ago. So that's kind of why I like.
One more comment here, also from Chalk Talk. Dividend Dog has more dividends and more muscles than me. I'm not sure how he's seeing all those muscles under that hoodie that you're wearing, but
Hey, I haven't done my 200 push-ups today, so I need to. I still got some time. I got to get up on that, but appreciate that.
Ted, I was going to ask you, man, what's the workout split looking like?
I'm gonna be honest with you, Ryan. I get that question a lot. One of my neighbors in my complex here is Dean. He'll see me coming from the gym. He's like, dude, what do you do when you go in there? I'm like, I'll be honest with you. I do 200 push-ups, and if I'm doing leg day, I'll do like a 4x10 or 5x12 or anything, with high reps, and then I'll just incrementally go up like 5 pounds and so on. Test myself. Back history of this now, I power lifted for 6 years, for 4.5, about 4 years. But I've been lifting weights since I was 15. So I've been in the gym for a little bit. So I kind of can go in now and get like a quality 45 minute workout in and throw in some cardio, and I know what I need to do. And I know if I don't sweat, as long as I show up and get the work and the reps in, I know as long as I'm doing that, I'll get the workout in. But it varies on how I'm feeling. But I like tomorrow, more likely to do chest day and crank out. That's to do bench press and shoulders and do a little back stuff. But I don't do anything too crazy like I used to.
Yeah, I mean, you do it long enough. I've been lifting for about a dozen years now. I know I don't look it, but I'm pretty into bodybuilding, powerlifting type stuff as well. But the longer you do something like that, it's exactly what you said. You don't need to go in and spend 3 hours in the gym anymore. You know all the right buttons to push and the right things to do to just maintain and slowly incrementally grow. I actually make this comparison kind of segueing into investing. Working out and investing, there are so many parallels between the two. I mean, you don't get a six-pack overnight. You obviously don't reach financial freedom overnight. Both the foundation of both of those things are consistent, incremental progress, slow, step by step, pound by pound in the gym, dollar by dollar, every single week in the portfolio. The parallels between the two are pretty incredible. And like I said, both are built on the foundations of consistency, discipline, and extreme patience, really.
Yes, you hit it right on the head, man. I mean, it's funny what I can say now. When I first started powerlifting, I mean, I think my squat was like 300, 315 pounds. And I would say by the end of my powerlifting career, I hit like 505,
Dang.
I ended up with a 600-pound deadlift. I barely could have lifted 400 pounds when I first started. So I definitely understand the discipline and like the setbacks that you take, with lifting. You hurt yourself and you got to come back the next week, and you're not getting paid to do this, right? So it's like you got to have that will, that grit in you to really show back up and go back at it again, So, and it does take time and patience, but if you surround yourself with lifters in your powerlifting or bodybuilding communities, same thing we're doing here with the dividend and investing community, you'll eventually catch on, and before you know it, you'll be blowing past your gains, in no time. So
absolutely,
it's cool that you related and connected with it too.
Yeah, I mean with lifting, progress comes from progressive overload, like you said. Every so often, increasing the weight, maybe 5 pounds, or increasing the number of reps, or decreasing your rest time. But investing, especially dividend investing, has its own progressive overload too. And the progress in the progressive overload is compound interest, and it snowballs, as we like to say, and it builds on top of your previous accomplishments. So the two go hand in hand. If you're a lifter, you should be an investor. If you're an investor, you might want to consider getting into weightlifting, because you'd have the right temperament for it.
Yep.
Yeah, I've tweeted out those three disciplines that you mentioned, Ryan. I've tweeted it out more than once. The consistency, patience, and discipline. The consistency to take a little bit out of every single paycheck. The patience to know that you're in the long game, and then the discipline to have the patience and consistency, right? So I definitely get the comparison there, and definitely get the idea of you're not going to be ripped after one trip to the gym, and you're not going to be financially free after buying that first share in whatever company you choose. I'm going to bring up here the next comment, which is kind of towards Ryan. Let's get on the KRC bandwagon.
Ooh, what's KRC?
So I don't want to spend too long talking about it, because I shove it down my audience's throat like all the time. But KRC is Kilroy Realty Corporation, and they're a real estate investment trust that's kind of been out of favor these last couple of years, just because they are an office REIT primarily. A lot of office buildings in, I don't want to say, in some pretty unloved areas right now. The Pacific Northwest, a lot in the Bay Area, Los Angeles, San Diego, so a lot of California properties. They've expanded into the Austin, Texas market. But in general, people have not been a big fan of this company, just because of the whole sentiment surrounding offices and office space and office REITs, as I'm sure you guys can imagine. But the thing about this particular company is, and it's really plummeted in share price over the years. It's starting to rebound now. I think just in the last month, it's up nearly 20%, which has been like such a blessing. But it's a lot of the poor share price performance has come as a result, not of the company's financial performance, but just the general sentiment surrounding offices. If you look at the company's income statement, if you look at their balance sheet, it's very strong. A lot of growth both on the top and bottom line. So it's still firing on all cylinders, pays a nice growing dividend. Tom, I think you'd like the dividend stats there if you like Realty Income's dividend stats. But
yes,
you know,
I see it here, Ryan. It's got a 6% yield. It's got a 17 PE ratio too.
yeah, I think the P to FFO, which is kind of like the real estate investment trust equivalent of the PE ratio, I think is in the single digits right now, somewhere maybe 6 to 9, if I'm remembering correctly, somewhere in that range. So it's a pretty cheap stock.
Okay.
Financials look really good, nice dividend stats. But the thing is, the risk from it comes from what's going to happen with office spaces. But throughout all of this, their occupancies remained very high. The balance sheet's still been very strong. They're continuing to beat earnings and grow and beat their previous numbers. So it just looks like a company that, to me, it looks like there's a mismatch between the price of the company and what's really going on under the hood.
When you look at that,
I'm just going to jump in there quickly.
I'm
just going to jump in quickly with a point. Here in Canada, my REITs and my office REITs are just getting hammered on their share price, primarily due to interest.
I think we lost him.
We lost him. Tom, what were you going to say?
Yeah, I was just looking at this one, Kilroy. I haven't looked at it because whenever I hear
there he is.
Office, I just
sorry
the other way.
What were you saying, Tom?
I was going to say, whenever I hear the word office in a REIT, it's like, oh, not for me. I'm looking the other way, but you hope I'm going to jump on it, but for the right people. Gosh, this was a $90 stock 3 years ago.
Yeah,
$80, 6% yield currently. So, what is their class of real estate? You know, like their occupancy is good. Like what is it?
Yeah,
what's their?
They're all Class A properties, and that's kind of the competitive advantage for this particular company over other offices in the space. All of their properties are highly amenitized. They are, if you're going to go work in an office, these are the places that you want to work. And a lot of their tenants are big tech companies, which could be a good or a bad thing depending on who you ask. But they also do have some apartment buildings, so it's not 100% office. It is the majority office, but they also have some apartment buildings in the markets that I mentioned. They also have and are building out a higher percentage of their portfolio directed towards like life science buildings. So there's some other things besides just offices, but they are primarily an office REIT. But like I said, highly amenitized buildings. You can take a look at all of their properties on the website. You can see from their investor presentation who their clients are, who their tenants are, excuse me. It's, I don't know. It's one that I've been buying. I could be wrong on it, but we'll see what happens.
I'm going to look it over.
Yeah.
Thoughts on this comment?
I'm looking at it right now.
Vici over KRC. Any thoughts there?
I mean, the Las Vegas Strip is pretty hard to beat. It is one of a kind. So no, not much of an argument in my mind.
Yeah. I mean, yeah, Vixie for sure. I mean, Vixie can sit in the same boat, I would say, as as far as like one of the best REITs you can buy in the real estate sector, I would say. What do you guys think of NNN compared to O? It's got a little higher yield, pays monthly. It's got a lower AFFO just by a tad, and it's got better dividend growth than O. But I don't see many investors talking about it or in it. But obviously, I hear about O a lot too. So I just wanted to hear you guys' thoughts on NN or Triple N in comparison to O.
So I've never looked at their portfolio property, so I'm not quite sure what they're about, but I'm looking at their income statement right now. Really solid growth in rental revenue. Really solid growth on the bottom line too. The AFFO is growing quite nicely from what it seems.
Yeah.
So I don't know. Looks like a pretty nice one. I'd have to do some more research into it, but there's so many Well, looking at the dividend stats actually on Seeking Alpha, at least, it looks like their yield is below 4%. Maybe Seeking Alpha is just tripping though. Below 4% yield, negative 5-year dividend
Okay.
growth rate. But
What?
but then if you look at the
I see
dividend,
here.
yeah, so it's Seeking Alpha is tripping because if you look at the dividend history chart, it's going up over time, and it has done so. It looks like since the mid 90s at least, which is as far back as this goes.
Okay, I was gonna say, come on, don't tell me I'm looking at something wrong in live.
Man, that's you got to double check Seeking Alpha sometimes because the dividend scorecard where it shows just like the highlighted stats, it can be mistaken. It can be a little bit misinformation. So you got to look at the dividend history to see what's really going on sometimes.
Awesome.
Hey, Doug.
But yeah, it's just one I have on my list that I'm just like, yeah, do I like triple N? Do I want to do O as a monthly read? Because I really don't have like I don't have a monthly read in my portfolio just yet. So I'm looking at O and I'm looking at triple N. So I'm still trying to figure out.
Hey, Doug, you might want to look at ADC. I compared NN about 3 months ago to agree.
Okay.
And I ended up with ADC, although there's a lot of duplication in their portfolio to what O has. I just like the growth opportunity a little bit better. NN looks good. I think the reason I looked at ADC was I think the beta was a little bit lower. I think that
it's got a beta of 0.44. ADC does.
And let me, and there were a couple things. I mean, I almost bought it, and that's how close it was. So ADC, it'll never be as
good
to that.
Let's see. And then we got O has a beta 1 year of 0.61.
Right.
So just a tad more volatile, but
hey Tom,
long term.
I'm gonna let Tom take this comment here. It's actually from Henry, one of the young guns, as we like to call them in the investing world, and thoughts on SLG. I'm not familiar with this one, but it sounds like maybe have you and Henry discussed this one before, Tom?
Ooh, SLG. Let me see. Let's go to the hopper. I don't remember discussing it. What do we think of it? What SL Green Realty? Let's take a look at it. We can figure this out. I'll tell you one thing, just looking at it, like I don't like a 9% dividend yield for 8.74. I'm a dividend investor, but I'm not a high dividend investor. Just taking a look at it, it almost it's like when I go to buy a car and I go to a car lot. I mean, to a salesperson, but you come at me too strong, and that's what a high dividend yield is. Come at me too strong, I may almost back away. So that's my
red flag when you see that high yield.
Ryne, do you know much about this? Dog, you know?
I've heard of SLG. I could be wrong, but I think they own a lot of the like popular high-rise buildings in New York City. I could be wrong on this, but I thought they owned one of the more prominent buildings, like the I don't even remember, like the World Trade Center or something like that.
The Freedom Towers, maybe.
Yeah, it was something along those lines. I think they own one of those big buildings.
Yeah,
245.
I think Brad Thomas has talked about SLG before on his timeline on Twitter. I think I've seen this one before because I think he's in New York a lot, and he's a huge real estate investor himself, like in the market and outside as well. So I think this is one of his companies that he owns.
Gotcha.
Right. He always takes pictures of the buildings and stuff in New York when he's there. So, and he always tags like the company, like he does it with his Starbucks in the morning or American Airlines on his flight. I think I've seen him take a picture of some buildings in New York, and it's like SLG. But I haven't really taken a look at them. I'm looking at their portfolio right now just to see what type of properties that they own.
Yeah.
It's a hold right now on Stockrover. It's the little platform that I use. The past month is up 32%. Holy crap!
Let's
see.
Now I remember.
Go ahead, Tom.
I was watching CNBC. It must have been Friday, right around lunchtime. They had. I remember they didn't have SLG on, but they had. I think it's called Empire Realty Trust, which is actually that owns the Empire State Building. I think that's their main property that they own, which I don't like a single property REIT where it's most of it. But that got me onto the earlier point, Brian, when you were talking about your KR. That almost opened my eyes to office REITs again. And then you coming at first thing today, this morning, that's like, mate, is there a message here? And now about SLG. So it hits if three things happen randomly all at once, it's almost like a note. Hey, I better do some research on office. I might want to start looking at this again. But they're all not garbage. They're all really good stuff out there.
Right.
I mean, what do you guys think they could? I mean, what we have to look at it. Either we go back into the office and the offices are with, workers, or are they going to turn these into like data centers where they get more use out of it, or do you guys see them doing something like that in the future to give it more value?
I'll take that one quickly. So here in Canada, what's been talked about a lot with empty office spaces, especially in the larger cities like the Toronto, Calgary, Vancouver's, is turning these empty office spaces into residential units, because there's always a need for more housing. So what I've heard and read about that so far is, yes, it can be done, but it's easier said than done sort of idea to convert an office into residential. So that's sort of one option that I know a lot of companies are looking at here. I don't know if there's anything similar going on in the US, but yeah, so definitely residential is needed. We definitely, Canada needs a lot more residential, especially in the big cities. Our population continues to grow as more and more immigrants move here, and we just don't have, well, we do have the space for them, but nobody wants to go and live in northern Saskatchewan, right? Everybody wants to live in the major urban areas. So I'll just let any of you add on to that. Any thoughts?
The big thing when I saw.
No, I like that idea. Go ahead, Tom.
I was going to say, I'm really going to look at what their portfolio is. Like if it's Class A commercial real estate, you're always seeing there's going to be a need for that. I think where you get into, it's the location argument. Same thing with commercial. If it's B or C, like outdated stuff, you can't rent it. It seems like in my market, that's what's always available. The Class A stuff. I don't know what you think, Ryan. You're the office expert here.
Oh man, I do not want that label on me, because I'm certainly not. But I see mixed things. I see over time, I've seen on one hand certain large companies calling their employees back to the office, if not full time, for a number of days during the week. Maybe not 5 days, but maybe it's 2 or 3 days in office, 2 or 3 days at home. In which case that would still create the necessity for this office space. I've seen that be more the trend lately than I have seen people staying home. But at the same time, I mean, there's just certain jobs you can do from home. So there's going to be remote jobs. There's going to be work from home jobs. I see a ton of them on Indeed all the time. But at the same time, I still think that there's going to be some people who and some companies who want their employees in the office, if not full-time, like I said, part-time during the week. So it just depends. But I would imagine over the long term, over a long period of time, will continue reverting to something more normal, where there's at least a hybrid approach of people in the office. But I could be wrong. I don't know. We'll see.
I'm definitely going to take it after this call. I'm going to go SLG. I'm going to do a deeper dive on it. So there's 2 stocks I'm going to review this week. And SLG is going to be the second I'm informed. When I saw Empire, it was like, oh no, sounds good, but I just don't want to own the Empire State Building as the core of the portfolio. But SLG might be worthwhile to add to my second stock. I'm going to review. I'm keeping under wrap of what that second stock is. But I think it's the stock that 2 years from now we're going to say, hey, why didn't I start taking in that stock? What was it? 23.
Ooh, I can't wait now.
You must be talking about Intel.
Nope, I definitely.
Well, I already went down that rabbit hole myself. Oh man, that was
Nice.
fun.
He's a
I have a
pretty big
question.
fan,
So,
Tom.
you
Tom and
know,
I are Buffett and Munger.
ooh,
Ted, what
I
were you going
wonder-
to say, man?
oh, I was just saying with you know, with airline picking back up and travel picking back up, what do you guys think of this Apple hospitality? You know, Airbnbs are starting to get a lot of brush with, you know, pricing and overpricing, and hotels are starting to, you know, have higher occupancy rates. And even myself, I have to travel at least 3 times, you know, by the end of this year, and I'll be staying in hotels. So I can imagine any other company. Like you said, Ryan, you know, companies are starting having people coming back into the office. So I have a friend that works at Amazon. You know, she is now starting to, you know, they're more likely going to have her go back into the office. You know, so more likely they're going to be using those buildings. So that's just me just thinking like other companies are going to start, you know, testing the waters on getting occupancy rates back up, and you know, obviously with travel, so that means like airlines leading to hotels, and so on. So Apple Hospitality, they own a bunch of hotels across the U.S. and their monthly REIT, I think it's at 15. What is that, 1564 right now? I haven't taken a look at their AFFO, but they are a strong buy here on Stock Rover and 20% undervalued. And it was just one that I'll be taking a look at. I keep saying that I'm gonna add it to the portfolio, and then I don't add it. But this is like one now that has been consolidating for quite some time now, and I know at some point it's gonna make a run, you know, north, you know, because I know hotels, and you drive by hotels now, they're, you know, they're packed, you know, so that's just like a sign right there for me to, you know, take a deeper dive and looking at this one this week.
And their
Now,
hotels
some
are like.
investors out there.
Go ahead. I'm sorry, man. I didn't mean to cut you off.
Oh no, you're good. I know there's some investors out there that right now that are probably listening. I know there's a couple of them on Twitter that are invested into this one. So this is going to be one, like I said, I'm going to look forward to adding and creating that monthly income, and then maybe add on triple N or O or ADC, and then just keep it that simple there. Don't want to, you know, overboard it.
Yeah.
Go ahead, Ryan. My bad.
I was going to ask the type of hotels they own or the buildings. It's like Marriott's, Hilton's. It's those sort of things, right? Okay.
Yeah, like higher end hotels, I would call them. I mean, if I'm staying at like a Marriott or a Hilton, I'm like, yo, these things, you know, they're pretty nice, and great customer service in those too, and you know, customer retention goes a long way in hotels, because you know, you find anything bad one time in a hotel, you're more likely probably won't go back there again, more than likely. So I feel like they've had enough time to kind of brush up on their skills, because people weren't in hotels, people still had to go to work in hotels. So I feel like the hotel industry and revenue could be on the rise here. So
I'll tell you what. So it's kind of on the same lines, but a little bit of a change in subject. One thing here in Las Vegas at some of the different hotels, like the Palms or right off the strip, the Palms Hotel. You could do this, I think, at the Vidara. There's one or two more. MGM, they've got these things called, they're basically condos, but they call them condotels that you can buy and actually live in, you know, like a normal condo. But at the same time, while you're not there, you can rent it out as like a short-term rental. So I was just going to say that's something that I would love to do that at some point. I think that'd be so cool. Just have a little condo on the strip, go stay on the weekends, rent it out the rest of the time. I don't know, just kind of a random thought.
Yeah, that's just mailbox money for you, man. Heck yeah,
that'd be awesome.
I love Vegas out there. And next time I come out there, man, I'm gonna have to hit you up.
Dude, I'll be mad at you if you don't hit me up.
Hey, October.
Okay.
October.
Okay.
October.
Cool.
Hey, Dave, maybe we'll do a live stream out in Vegas.
That sounds good to me.
So
that would be wild.
on that subject, I don't know exactly when this will happen, if it even will, but at some point, I just feel like this community of investors and people creating content around investing is really, really growing into something big. I see so many people starting to create content to talk about what they're doing, which is great because it obviously builds awareness and gets more other people to do this stuff. But at some point, I would love absolutely love to do some big, I don't know what the right word is, conference, convention, some sort of huge get together for all the
Mhm.
creators in this investing and dividend investing space here in Las Vegas. I think that'd be
Wow.
a really fun thing to do
Yeah.
sometime. Just one
Like
big meet and greet.
like VidCon, but VidCon for investors. That would be
Yeah.
incredible.
We tried to do that in
DivCon.
Chicago, our DivTwit, but obviously, we got some pretty decent traction. But we wanted, Tom had recently just reached out on if we were planning on doing another event, and I was like, nothing is like set in stone right now. It's just like kind of, it's like, yeah, I would love to set something up and do it again with all of us really getting out there. But yeah, man, that would be awesome.
Yeah, let's do it.
Well,
We're gonna
I'm sure everyone.
we're gonna name it in
Vegas.
we're gonna name it in Tom's honor and call it TomCon.
Captain Con. I like that. That has a ring.
Well, just the group chat I started, like, yes, it was kind of for the purpose of finding other YouTubers and podcasters that wanted to come on and sort of share their experiences. But at the same time, I hope that group kind of continues on so we can all like share ideas with each other and bounce ideas and even thumbnails or whatever. Like I really hope that group continues and sort of grows and I don't know, we'll see. Maybe it dies out, but that was kind of my idea of and also having that advantage of having that ability to be able to ask each other on each other's channels as guests, like exactly like this, right? So
Mhm.
that was just sort of one of my thoughts in creating that group chat.
Yeah. No, it's a good idea.
Yeah,
It's
no,
good, it's
that's
good that we
kinda-
have that.
Yeah, thank you. I do kind of want to rewind to last week. Last week was a big earnings week for a lot of different companies, and just anything that
Yes.
surprised you, any dividend raises that you thought should have been bigger, or that didn't happen that you thought were going to happen, or just anything that. What's your take on
I think
anything from last week in all of the reports? Anyone?
I think ET gave a raise was it last week or the week before? I can't remember. But I mean, I think it was like a penny or two raise or something like that. Nothing to really write home about. But earnings, I mean, the market hasn't pulled this rug on us yet, so it's still running, upwards, and haven't found really any opportunities besides in the REIT sector right now. It's where I feel like all the opportunity lies. You go check out all the REIT stocks; they're starting to make their run, but you go look at a tech stock. I mean, it's like blowing out of the water. So I mean, that's where, like I said, I'm sort of looking for opportunities, but nothing surprised me last week is earnings, because I didn't have many companies that was reporting, but this week here I got like basically all of my favorite companies: Apple, Amazon, Uber, I think CVS, are all reporting this week, and obviously Vixie last week reported solid earnings. So, and that's just like easy. That's a layup play there. I feel. I mean, it's Vegas. It's Ryan can attest to that. So yeah, that's my take on last week. But this week, if you ask me this question next week, we may have a different answer.
Okay, fair enough.
But I'm looking forward to
Ryan,
this
what
week.
was your take on anything from last week?
I listened to a few calls. I still have a couple more on my list that I need to go through, but so far I've listened to Intel, I've listened to 3M, I've listened to AT&T, because those are in my portfolio are the ones that I feel like I need to watch the closest right now. Add Verizon to that list as well. But I gotta say, out of those three, the only one I really walked away from feeling a bit not great about was 3M. The more I hear from that company, I mean, there's so much uncertainty surrounding that company right now. I think just with the multiple litigations, and they did announce this like $10 billion settlement, which they which they took a charge on for this quarter, which really was not great for their numbers. But still, even that's not set in stone. That might not even be accepted by the courts, and they might have to shell out even more money than that, or there might not even be a settlement. So with that company, there's just so much uncertainty. I didn't feel like there was anything from their earnings call that was very reassuring, which is understandable. I mean, it's hard to know exactly how that's going to play out when the situation is so fluid. But I will say that's one company that as time goes on, and I'm not a big seller. I don't think any of us like to sell out of companies if we don't have to, but that's the one in my portfolio I could say I could see myself letting go of. And admittedly, I bought that one. Someone asked me, well, on Twitter, actually, someone asked me, well, because I was kind of briefly talking about it as my biggest loser and being wary to buy more. And they asked, well, what's changed about it now when it's $100 per share? That's different than when you started buying it at $150 per share. And admittedly, 3M, I've only been investing seriously for about 3.5 years or so. So in investing terms, that's like a drop in the bucket. And I remember 3M was one of the first stocks that I bought, and I bought it at a time when I admittedly didn't know anything about this stuff, how to research companies, how to look at financial statements and really think about this stuff. I'm still learning, but anyway, I remember when I first bought it, I was like, okay, Dividend King, 60 plus years of growth, pretty stable. Okay, that sounds good. Oh, they make Scotch tape. They make Post-it notes. Well, those aren't going away anytime soon. Sounds like a winner to me. And so that was like my entire thesis for that, buying into that company when I first started. Not good. And so now when I look at it, I'm like, this is not one that I see a very bright future for, even if and when they do get past this litigation, the company's not been a really strong grower. So it might be a good time to just kind of cut ties with it. And I'm sorry for being so long-winded with that response there, but
I thought there was good. They didn't cut the dividend. I really was thinking we had a dividend cut coming, but I would be cautious on 3M. I wouldn't call it an insider. A person I know in the know says this military earplug thing has more legal exposure than the whole Forever Chemicals thing. So it didn't give me the warm and fuzzy. I haven't owned it, but let's talk about some really good last week. How about McDonald's is a monster. If you want to own it, you'll never get it at your buy price. That's why I have never owned a share of it directly in 30 years. It's just amazing. McDonald's really stuck out at me. Their results. Coca-Cola looked okay. They put me to sleep every 90 days, and somehow I've ended up owning it for 20 something years. But it really jumped out at me.
What about Procter and Gamble?
Last week, I didn't do a full dive into how did that one.
Yeah. I didn't do a full dive into it either, but they beat on both the top and bottom line. Looked like they saw some year-over-year growth as well.
I'm really hoping Uber comes out with. I have loved watching Uber progress the last, I'd say, 12 to 18 months.
Likewise,
Their CEO has just promised, delivered quarter by quarter. Realistic expectation, cutting costs, increased cash flow, and are almost. I think if it's not this quarter, within a couple of quarters, going to be profitable. Kind of reminds me of another company I bought a long time ago, Meta, when it was Facebook. All of a sudden, good goes to great pretty quickly. Been waiting on that one for a long time. So that's the one I'm eagerly waiting for to see how that story is continuing to play out.
Mm-hmm. Likewise. I'm actually buying some shares tomorrow. Uber.
Yeah.
It's funny you mentioned that.
I'm very interested, Tom, in your point about Coca-Cola, that you've held them for 20 years and they put you to sleep every 90 days. And my first thought there, my initial reaction is, isn't that perfect? Investing should be boring kind of concept. If investing is boring, then hopefully you're doing it right. And it sounds like Coca-Cola is doing it right. If you're just nodding off every 90 days because another dividend rolls in, and 20 years later, you're still happily holding the company.
It's probably my worst performer over time. I went back. I think I've only generated, it was a 9.08% return over 20 years. Just a month or two ago. So yeah, it's kind of boring, but that's not bad. And I would have probably generated a lower return for myself, just trying to get that higher. I would have come in half that. So my general thought when I buy a stock, Dave, I'm glad you brought that up. I index and large cap growth fund 80% of my money. So if I go in individual stock. I call it oversampling. It's like, oh, I want a little bit more than that I never get in the index. So I get upset. Me and Radish, my dog, we have this back and forth. She's mad. She's like, she told me to buy NVIDIA on one of her walks 6 months ago. And I said, no, we got that in the index fund. Need NVIDIA because when NVIDIA comes back down a year, 2 years, Google has their own fabrication plants for AI chips and stuff like that. NVIDIA is potentially not going to command that. Face it. So Coca-Cola, people are always going to be throwing back Cokes, going to Starbucks, things like that. So I oversample on a few names, but I'm cool.
Long bucks.
I'm getting pumped up when you get something like that. The sleepy stock.
I see you are. I feel your energy, Tom. I love it. Let's go. And shout out to those Clemson Tigers, by the way. Shout out to those Clemson Tigers.
5 weeks, baby.
Tom, we'll have to meet up and go to a Clemson game. I've been dying to go to a football game over there since I played. I was doing my summer ball tenure.
No doubt.
Over there. So I'm gonna have to come over there and
Awesome.
go to a game.
Awesome. Let's talk about some of your other, I guess, favorite. I think we kind of touched on them with last week's earnings, and there's obviously tons of great companies in there that and Ryan had kind of mentioned as well. What is like your number one winner right now that you're really focusing on, or something that you're just focusing on dollar cost averaging into to build a position higher? And I'm sure these answers are going to be very different because I know Tom is in a different stage of life than Ted and Ryan, but yeah, just any thoughts there? Let's start with Ted on this one, actually.
Yeah, I actually just pulled up my portfolio here. I'm like, hold on, I'm not gonna want to go off to start saying something random. Right now, I'm liking from a growth standpoint. I'm liking where Alibaba is priced right now. They're trading at a decent PE ratio in comparison to Amazon. I do own both Amazon and Baba, but I want to get more Baba from a growth standpoint. And I'm trying to get 100 shares in SCHD. Right now, it's been on a solid little tear. So who knows when it's going to come back down into that $70 range and $71 range. So as the old saying goes, just dollar cost your average way in on the ups and the downs, and zoom out, and it all smooth sell. So
right.
So SCHD, Baba, and Apple. Yeah, like an Apple too. Apple under 200 is go ahead and grab you some. Yeah, Apple under 200 now. I mean, we were saying Apple under 150 in January or March, I would say, March or April. So I still think Apple still got some juice to run up towards 200 and above. I like Baba right now, and my dividend play SCHD. I'm trying to get 100 shares in that. I'm at 74 right now, so giving myself to the end of the year to get that. Got my 100 shares in VIXI, and so just slowly checking boxes off day by day, week by week. Just like we go to the gym and not trying to rush the process.
Good. Ryan, because I know you're also more in the accumulation phase. So, what are you looking to add to in the coming weeks and months? What positions?
Yeah. So recently, I started a position in Williams-Sonoma a few weeks ago, and so that's been my primary focus as of late. I've just been kind of dollar cost averaging into that, starting to build out that position in my portfolio. But I've also been averaging down on KRC some too. I've been buying maybe a share or so every single week just to lower my average cost, which doesn't always work out, but that's been a good strategy with that company. But yeah, I would say Williams-Sonoma right now is my top priority. I'd like to maybe pick up another 10 to 15 shares before I kind of cool it and switch gears.
Nice. And then Tom, because like I said, you're in a different stage of life and investing. So are you still accumulating anything, or sort of what's your strategy now?
I haven't thrown in the towel. I'm still.
Tom said he's not doing that, man. Come on.
You can't jump off the horse that got you here. That's Williams know me. You're making me hungry. Are you a foodie, Ryan? Do you like to cook or stuff like that?
I know my way around the kitchen. I cook quite a decent amount. I wouldn't consider myself a Gordon Ramsay by any means, but I know I'm a pretty decent cook. I'll just leave it at that.
If you're hungry, you're gonna feed yourself. You know how to get it done. There we go.
Like being into health and fitness and stuff, a big portion of that is nutrition. So you got to learn to make good food. Actually, you got to learn to make healthy food, and you got to learn to make it taste good. So I picked up some things.
Yes, they eat the same thing every day.
Well, Ryne, it's settled. We're all coming out to Vegas then.
Okay.
Yeah.
Sounds good to me.
Fun town, great shape. That's good stuff. No, I'm only adding 2 things right now. So SCHD for 2 reasons. It's a smaller position. It's the only thing I have less than 100 shares in. So I want to build that up. I just started it this year. And what I really like about that, and I know it's underperformed the last maybe 12 or so months, it gets to that thing. Sector rotation, sectors fall internet. I think they've got a lot of healthcare. And maybe financial exposure more than the rest of the, so they're falling behind it. We're starting to see this maybe broaden out in different ways. And guess what? SCHD went from high 60s to 75 pretty quickly. So I'm adding to that, always adding to O, and I just started EDC up. So those are the only things I'm adding to. My other stocks are all, I only have about 10. I just did this on one of the podcasts I stood up last week, my portfolio. I only have 10 stocks. Maybe it's 12. I did a couple out, but I'm not adding to any of those, just letting them run. But I add every week.
Yeah.
I've got a dull portfolio, so I don't do as much as the other guys. I know some people added 2 shares of this, 1 share of that. I just said tomorrow I think I'm either going to buy a Realty, but I might go in on more Realty Income Corp tomorrow. Do week 21, 22 of the SCHD channel. That's pretty much it. And I'll just give my props. How about my Walmart? Wrong. Record high. I have never seen Walmart like this and Target like that. Usually they're more together. I've never seen that in 30 years. Kind of odd.
Interesting.
I'll you just said Walmart, right?
Yeah. My base case is Walmart, and I would want to buy Target, but I own Walmart and Costco. I don't need, so I'm not going to buy Target. I don't need to oversample that much, and I want to buy Kroger, but I already have Walmart, which runs a wholesale club, a discount center, and gas stations, which I really like, and everything else that they do.
And their tire center is cash flow king too.
Sometimes I'll go to their tire center and just hang out.
See?
The tire center is that good, is it?
I don't know. I'm just messing around.
All this talk about
no, the tire center at Walmart is great here. Like that's where you can go and get like really good. If you don't have a Costco membership, I'll tell you to go to Walmart and get a tire. Like, I'll tell anyone that if you don't have a Costco membership, go to Walmart and get you a tire. They'll give you the exact same type of service right there at your local Walmart.
I'm just going to mention, I'm sure all of you follow Craig. All this talk about SCHD. Craig's amazing at
shout out to Craig. Yep.
SCHD updates pretty much on a daily basis. And so, yeah, shout out to Craig again. It seems that we give him a shout out almost every episode on the Passive Income Podcast because somebody's always talking about SCHD. So I always want to make sure that the people know you can get a lot of really good information by following him on Twitter or X, whatever you want to call it.
Oh yeah, the new Twitter name X. I was like looking for the Twitter app on my phone.
Yeah.
Was it on Friday morning? I was like, what? It's like, did he change the app, the whole thing too this quick? I'm like, come on. What is this? Did they ever pay the guy that he took the name from? There was a Twitter account that was his like name was like X or something associated, like the whole like logo idea that they have. It was from some guy on Twitter that they took his name and idea or image and basically just put it on Twitter.
Yeah, I'm not sure how that played out or is playing
out. Yeah, there's like a little story going on about it. It's pretty. I didn't get too far into the woods. I was like, whoa, well that's pretty like weird, but. Yeah. And they let Sam go for free too, the crypto guy. He's not getting charged for none of his stuff.
Sam Bankman-Fried, what? Are you serious? They dropped the charges? Are you sure about that?
Yeah. That's the same thing I said when I saw the headline. I said, no way, this dude's walking free.
I hadn't heard that yet. Wow.
It is a crazy world we live in.
Kind of wild. What do they hire? Like 900,000 extra IRS agents to go through our memo payments? It's crazy. All right, IRS, don't come after me. I'm just kidding, but
the
same crazy.
Tom, just yesterday or the day before, Tom, you tweeted about banking and the Canadian banks and how many banks there are just in I guess in and around Charlotte, North Carolina.
Yeah.
So, and you guys all know that the Canadian banks is one of my favorite topics. So, let's dive into that one, Tom.
Isn't that? I have been wanting to look at. I've been wanting to look at that because I've always heard you say that. And I knew you didn't have as many different banks and everything. You always talk about the big six or whatever. So the best I could find was like there were 34 like banks chartered in the whole country of Canada, and I was thinking, gosh, how many are just in Charlotte? And it was like I fudged the number a little bit because I couldn't get a real number, but anything I looked at in Charlotte was 32, 33. And we have TD banks. We have a Canadian Charlotte, but that's 34 banks and probably 10 credit unions. So it just, man, that's just one, top 20 city in the country. 34 banks represented. So I thought that was pretty neat.
Yeah, and to add to that, I would say to get to 34 in all of Canada, you would have to be counting all of the credit unions as well. There's no way there's just 34 different banks. I would have to be all the credit unions as well.
I think it was, yeah. I think
we do have quite a few different credit unions, but there's literally about, the big six banks. The bank that's sitting in number 7 or 8 just recently put itself for sale, and the big six, none of them want to buy it as of yet. So what does that tell you?
Dave, do you still have the I'm sorry, do you still have the Toronto Dominion tramp stamp, or did you get rid of that?
Me? The tramp stamp? What are you talking about?
The TD one, the ticker symbol on your lower back?
No, I don't.
Dave's like, wrong guy.
Yeah.
He's flashing the headlights.
What are you talking about? All good.
Dave's went on freeze mode.
All in
like,
good
I am not available.
Yeah.
Guys, there's this play. Well, the ticker is play. It's Dave and Buster's.
Ooh.
It's another little growth stock that's on my list right now that I want to get some shares in and see where it goes. Only because I looked at their investor relations, and you can go there and get the food, gaming, drinks, and music all for under $100. Like that's where you can go experience all those type of events at one place with the family, besides going to a concert or you're going out to eat. And they have over I think 69 million visitors coming through a year at 210 locations. They're trading at a solid PE ratio of 2. Let's see. Their PE ratio is, So yeah, PE ratio is at a 15, and their forward PE ratio is at a 10. And so I like where it's priced at right now. They say it's going to go up 20% here. I don't know, who knows when. I give it a year, maybe not, over a year. Don't quote me on it, but 53.86 is target price, is priced at 45.40 now. Just a little swing play that I'm trying to get into to diverse my portfolio as much as possible, because who knows, we could go into a recession and everything shuts down and people are going to start cutting back costs on things, and we're still going to want to go outside and experience things. And I feel Dave & Buster's could be that cheap entertainment way for a lot of folks that can't, afford to go to, to the Beyonce concert, to the Taylor Swift concert, and then take the kids to the arcade and things like that. So like Dave and Buster's is a solid play. I actually had a friend, I was telling him about this. He was like, dude, you know what? It's crazy that you said that, because just took my son there, and it was like I spent $80. We got food and games, and it was awesome. So I was like, yeah, see, I was like, this is a perfect play. He was like, and it was packed. I was like, continuously cash flow in there. So you really don't hear anything bad. The places are always clean. You know, great food, and always, like I said, always live and attractive activities going on. So Dave and Buster's is another little one that I have in my portfolio. Ryan, what do you think about AT&T? I snagged 2 to 3 shares of that last week. I want to keep adding. I like where they're heading. I like buying companies that are beat up. They just cut their dividend. They're not going out of business anytime soon. I see AT&T trucks all in my complex. There's 3 or 4 stores up and down the street down the road here. Their cash flow is looking positive. Their payout ratio is low based off of their last quarter earnings. How did you feel about that? This is great that you said to you, because I wanted to talk to you about it, and I didn't do it last week.
Yeah, I actually feel okay with where AT&T is at right now. I mean, the biggest issues that people have with the company are the debt situation, which is understandable, but that's progressing. And they touched on that quite a bit in their earnings call as well. So they're very aware of the debt situation in the company, and they're working on it. So that's good to hear. I mean, the dividend's pretty well covered right now with free cash flow, like you said. There were concerns after the first quarter about them not bringing in a lot of free cash flow for the year, because they only brought in like $1 billion in this last quarter. But from this last earnings call, they're still on track to meet their guidance for the year of, I think, $16 billion. So it's good. The big hang up right now is now this lead cable situation. But from what I can tell, both AT&T and Verizon are kind of playing defense on the matter, and are, how do I put it? I think that they're at least right now, their stance is like there's nothing there. They said something like lead cables are not just, we're not the only ones using lead. It's in the railway systems, it's in the power grid. So lead is in all these other places. For some reason they're coming at us. Maybe it's just kind of an easy target, looking for just lawyers looking to litigate. Don't really know. We'll have to see how it plays out. But in general, I feel pretty good about AT&T. It's a pretty, the sentiment towards the company is very low, and I think rightfully so. Just they've not been a great investment over the years, but and it continues to be just a cash flow monster, solid dividend payer. Hopefully, as the next couple of years progress, we'll see that debt level get considerably lower than it is now, and maybe after that, maybe we'll start to see some dividend growth. But it's definitely not a good company for someone who's looking for share price appreciation or like a fast growing dividend. But if you're just looking for income, it could be a decent option.
Yeah, sweet. Thanks, man. I tossed it on my Roth. I read 3 articles on it, I would say. And one of them was from Morningstar. It was titled Markets Overreacting to T. And,
I read that one too.
Oh, sweet. So I think it was one part that really intrigued me was the cash flow, or cash flow would be 2023, 2025, or 2025. Cash flow would be increased or something like that. I can't remember. But it was just like showing me like, all right, cool. Management is trying to get the ball back rolling on their side. You know, they're trying to, like you said, cut down the debt levels. I haven't seen any stores or anything closing. People are still going to AT&T. And the reason I like AT&T too is because Apple is using Verizon, AT&T, and T-Mobile to continue to push their promo of $800 off of their iPhone 14 and 15s. So Apple is still continuously is a customer essentially to AT&T because they're using them to promote their phones. So they're still going to get cash flow. It's like you said, it's a tough company. It's not something that anybody new investing, I would definitely just say, hey, first stock, go buy AT&T. No, I wouldn't definitely say that. But it's definitely something that you should have on your watch list. But I like where they're going, and especially with 5G too. And they're, like I said, they're huge in the streaming and all of that stuff. So it's going to be a war, and I feel like the cell phones, they're always cyclical. There's always something going on. I feel like they're always getting picked on. And not really having like a solid trend. That's like the first thing I heard of, or first thing I heard when I, even started to look at the communications. Even when I was investing in Comcast, it's like there's always something going on, within the companies or within that market. So I feel like the market or just like in general always picks on those companies like that. I don't know.
Yeah.
You don't see Apple or Microsoft getting picked on by anyone, or Google. I mean, you get a couple little slaps on the wrist like lawsuits, but I don't see anything as huge as what they face in the cell phone industry, if that makes sense.
Yeah, and as far as things always going on, that can be a good and a bad thing for the telecommunications companies, because on one hand, it's good because people are addicted to their phones, and our dependency on these products just tends to increase over time. Not just phones, but laptops, pretty much connectivity in general is essential at this point.
Mm-hmm.
But so it's a good thing from that perspective, but on the other hand, it's also not a good thing, because as time goes on, the amount of data that we're consuming is increasing, which requires and our want for faster speeds and faster everything is also increasing as well. So our patience is kind of diminishing, which that's the responsibility of the telecommunications companies to provide that service. That's what they provide, that connectivity. And so they are also constantly having to upgrade their service and make things faster and make things better. And that's a huge investment, a huge perpetual investment for these companies. So that's another reason why people aren't super keen to invest in them, because yes, they generate a lot of cash flow. They have a lot of recurring revenue coming in, but at the same time, their capital expenditures are perpetually there. It's a huge CapEx business. So they're constantly going to have to invest and reinvest in themselves to stay competitive. So it's a good and a bad thing. It's a double-edged sword, really.
Just to add to exactly what Ryan said, just on the last episode of the Passive Income Podcast, I was talking to Bob at Tawcan, Tawcan, and he's Canadian also, but we happen to be talking about the Canadian telecoms, and he basically just said the exact same thing that you said, Ryan, and he referenced the U.S. telecoms as well, saying the large capital expenditures, the investments into a new 5G network, and how it's just like basically, not word for word, but very, very similar to what you just said. He said as well. So,
and it's interesting because the risks are that exact thing right there is number one, a risk to the company or a potential headwind that's always going to be there. But at the same time, it's also a competitive advantage because it creates a higher barrier to entry. So, you got to take the good with the bad. I guess just with any company, with any investment, you got to be able to see both sides and determine if the pros outweigh the cons. And a lot of people don't think that's the case with these telecoms, but at the same time, a lot of people do. And that's kind of the interesting about investing that I think we often forget, is that on the other side of any transaction, whether we're buying a stock, whether we're selling a stock, on the other side of that is someone making the exact opposite move. If we're selling, there's someone over there buying. If we're buying, there's someone selling it to us. So I don't know. It's just kind of an interesting thing that we often don't think about. And that's also why I think that speaks to the importance of being able to do your own due diligence and be able to do your own research and learn how to do that. Because especially now in today's day and age, there's so much noise. There's so much, there's just an incessant amount of information to take in on all these companies that you got to be able to decipher what you actually think about it. And so if you're going to be investing in individual companies, you got to learn how to do the research. But I think for a lot of us investors, that's where the fun is. And if it's not fun, then there's always ETFs.
Yeah. Exactly.
Oh yeah. Yep. Always. You can always do an ETF. ETFs are bread and butter in this market because you can sleep well at night. You don't have to worry about if something is down 10% and it's a very volatile stock and you don't even know what volatile is and you haven't even looked at it. So it's like that plays into a lot of stock picking too. When you see a lot of new investors when they go out and purchase like a lot of stocks where it's like purchase a lot of IPOs or just like a company like Neo or ChargePoint, just loading up on those type of companies. No offense to those companies. Those companies are great, no offense. But it's like they don't have a certain type of value or a way to fit into what the market is, where the market is going right now, or what we're all voting for in the market, I would say. So
what's Tom think about all this? We haven't heard from Tom for a few minutes.
Have you ever heard the term the brother-in-law stock?
No.
Oh, okay.
Mm-mm.
AT&T is my brother-in-law. 3 or 4 years ago, I had a friend who told me, "Oh, buy AT&T. The dividend's great, and stock was great." I think it was around $32, $34. So nowhere. I've never been a big AT&T fan. Maybe here, what did it close at 14 or so? I like that, but I'll tease again. I have got another big one. The other stock other than SLG, the one I'm going to review this week, I might even do a special test episode on Money Happy Hour just on reviewing this stock. This could be, this is going to be a classic case of 3 years from now or 2 years. What was I doing back then? How did I miss that? Stocks. How did I miss that? We all have those moments. This is kind of what it looks like.
Yes.
I'm seeing those criticisms and kind of talking about this one stock. Always the case. Always the case. How did I miss Chipotle at $240 because of a little, whatever it was, salmonella or something? Yeah.
I wish I would have got Chipotle at $240. Oh man.
You know what I'm saying? These are the kind of things like, yeah, dead forever. They'll never be back.
Just going back to Dave and Buster's while you were talking about that one there, Teddy, I looked it up and there was actually 2 locations in Canada, just both in the GTA by the looks of it. So that's a potential for Canadians as well for that
Yeah.
entertainment dollar. I see we're already well over an hour here, and I appreciate everyone's time. Thank you all so much for joining me here on this live stream roundtable panel.
Awesome.
Obviously, all the links are in the description. You can find Ryan at Retire with Ryan on YouTube. You can find Dividend Dog at Investing on a 9 to 5 on YouTube, and Tom at Money Happy Hour podcast. And all of those links are in the description. Before we sign off, any final thoughts from any of you or all of you?
I mean, I just want to say it was this is my first time chatting with you, Tom and Ted. It was really good to connect with you guys and chat with you this last hour, and I hope to do it again sometime soon.
Likewise. I've talked with Dave. Dave was my first podcast before I even really got into doing the YouTube and podcasts and stuff. So I wanted to give a shout out to Dave for continuing to do the Income Posse, podcast every single day and bringing that energy on Twitter. Shout out to my man Tom and Radish over there in the Carolinas. He was on I was on his podcast, and I'm gonna return the favor and have you guys get on our podcast as well. We've just been busy with work and stuff, but Ryan, it was awesome to finally get on camera and talk with you as well, man. Look forward to meet you in Vegas when I go out there for work here in a couple of months.
Yeah, definitely hit me up when you come in October. I'd love to get together. And Dave, I thank you, man, so much for including me in this. It's always a pleasure. Thank you so much.
Yeah, thank you guys. Also, thank you to everyone in the chat and keeping the comments coming. And yeah, so it's been like everyone here said, it's been a great conversation this last hour and so, and definitely want to let everyone else get on with the rest of their day. And be sure to join that passive income posse and subscribe.
Out to Stan too. Shout out to Stan. He just left us a comment. Good to see you too, boss.
Yeah, good to see you too, guys. All right. Thanks again. And be sure to join the posse, subscribe. All these links are in the description.